Hi, thanks for joining me again. So this time we're going to look at weakness in the background. And I've got a chart here. It's an old chart that I found on my computer that I've used previously as an example. I can't even actually remember what the chart is. And you can see here that price had been pushing higher steadily, and then there was a widespread up bar on quite an increase in volume. Now, you've always got to be aware of widespread up bars on increased volume, especially high volume, as they can often contain selling of some type. So always be wary and watch the response after you see a widespread up bar on high volume. It may not be a problem, but you want to see whether price continues higher or whether it's been used. Perhaps it's a used item or whatever that's caused the widespread and increased volume, and it can be used to sell. So you can see here that price has looked like it was going to push higher 2 more times on increased volume, both times, and both times it failed in response. And then this bar's attempted to go higher and closed very low on really high volume. So you'd have to be really wondering now what was happening in the stock. And you'll see here, this looks like a reversal bar. Just here, over 4 days, price pushes down 2 consolidation days and pushes up. But the response is a narrow spread up bar on quite high volume. The spread can only be narrow like that if it's encountering selling. Someone's selling into that bar, into the demand on that bar. And then the next bar has tried to push higher, closed really poorly on really, really high volume. You'd have to be very concerned at this point. You can see here, price made no real headway higher. If we mark the lows, you can see here's 2 really strong signs of weakness here. That's apart from all those other signs of weakness we could see. And you can see price broke down below this line. Price then proved unable to recover and pushed back down again. And it broke down for certain here. Widespread down bar. Now, no doubt there's an attempt to support the market through here. But once again, widespread up bar that's looking like it's promising. But price failed almost immediately afterwards and came back to the lows of this range. And prices moved up again here, but it's unable to sustain any push higher. There is a number of bars that look like they're going to push lower, but the market holds on until finally price breaks down again and it's unable to maintain itself above this level. Now, if we go back and look, once you get weakness in the background, and this selling is weakness in the background of the chart, and it causes a price breakdown, and the price breakdown is confirmed by the inability to regain the lost ground, and in response, price breaks down to a new level, this weakness in the background will have an ongoing influence to the trading on the chart. See, what happens here, for instance, is price pushes up. Anyone that's still holding in this area here sells into the price. It's letting them get out at break even or close to it. And that extra supply forces price back down again. And then when you get selling like this and people start to realise in the market what's actually happened, and they're unlikely to get these prices again, because you can be sure that anyone up here is saying to themselves, if price comes back up to these levels, I'm selling for sure. But price won't come back to those levels. It's highly unlikely. There's been the chance. If you look back here, you've had prices come up to here and pulled back. Then prices come up to here and pulled back. Prices come up again. Then there's been 2 up thrusts, and here price came back, and then it's pushed up again. Every chance in the world for people to get out. When price has proved it can't recover, it's unlikely, it's highly unlikely, price will get itself back to this level again. Anytime that price pushes higher, anyone who's been trapped up here is selling into the higher prices to get themselves out, and that forces price back down again. And this creates some kind of domino effect lower, where as more people realise that the game's up and prices aren't coming back, they then get out of the stock and price continues lower. This was a pretty determined effort to hold on through here, but it eventually fails again. And the same thing will probably happen through this area now. You'll get people realising that price isn't coming back and they'd better get themselves out before price breaks down again. This up here, once confirmed, becomes weakness in the background of the chart. And that's exerting an influence on the future trading. And that's why price continues lower and is unable to find ongoing support, because the weakness that originated up here, remember, it's probably professional traders who have exited the stock up here, and they were the ones driving it higher, and they're no longer driving the chart. They're no longer driving price higher. They've gotten out. They've taken their profits, and there's no one in the driver's seat anymore. And it's possible that if they were able to short the stock, they may have set shorts, particularly here and here, and then now they're short, and they'll encourage the price to move lower, and a markdown effect will take over, and their short position remains quite valid for a period of time in the future. So this is weakness in the background. It's previous selling and a change in trend. And that weakness in the background will exert itself over the market until strength in the background develops. And when some strength develops in the background, and you may get a period of accumulation, and a change in trend, and that will then put a positive influence over the chart. But until some sort of large event, large volume trading starts to take over, there'll be weakness in the background of this chart, and price is likely to go down for a period, and at best sideways to down. Okay, thank you very much for your time again. See ya.